Hey guys, this is John Watts. I appreciate you watching this video, and here's a question that we will answer today, and it has to do with back taxes to the IRS. So the question is, what is an offer in compromise with the IRS when I owe back taxes I cannot pay? And that's key, that you cannot pay it otherwise. And the reason I'm doing this is, as you know, a lot of our videos are about dealing with debt collectors, either who are suing us, and how do we handle that, or a debt collector that's just otherwise collecting against us, and maybe they're violating the Fair Debt Collection Practices Act, or we're dealing with foreclosure issues, credit report issues. Well, if you go back to debt collectors, kind of think about who is the ultimate debt collector. Well, that would be the IRS. Now, the IRS recently started going back out to certain debt collection agencies so that they can collect on behalf of the IRS. But the IRS itself has tremendous powers. And so a lot of times when we're helping consumers, maybe dealing with Midland funding or some issue on their credit report, we find out there's also an issue with back taxes. And so I wanted to start covering some of those cases and situations, but this will be a good, very simple foundation because oftentimes you see TV ads or hear radio ads or see things on the internet, do you owe $100,000 in IRS back taxes? Settle for pennies on the dollar. Well, that's true. It's possible, but it's maybe a little bit hyped up. In other words, you do have the ability in the right circumstance to literally settle for pennies on the dollar, but it has to be the right circumstance. So before we even get into the requirements, just what are the three types of offer in compromise? And I guess I should start off and say, well, what is an offer in compromise in the first place? And that is where you owe money. The IRS says you owe us money, and you say, I'm going to settle with you, make you an offer in compromise, so an offer to get rid of the debt, okay, whether that's 100 cents on the dollar, 99 cents on the dollar, or 1 cent on the dollar. And very strict requirements about how this comes about, but there's three basic types of offers in compromise. And there's the effective tax administration. This is very rare. This is where you owe the money and you have the ability to pay it, usually meaning you have the assets to pay it. So you're 90 years old, you owe $100,000 to the IRS, you've got $150,000 equity in the house, and they say, hey, sell your house, which you could sell your house and pay it, but you're able to make a compelling case. Maybe the house is handicap accessible or whatever the reasons are, where you say to the IRS, basically, take much less than what I owe. Even though I have the ability to pay, I'm just asking you to do this. Very rare that that happens. The second one is also pretty rare, and that is doubt as to liability. So you can think of this very similar to how we're often dealing with credit card suits or suits by debt buyers where we say, hey, I think you have a real problem proving your case. So this would be the same thing. The IRS says, hey, you owe $100,000. You say, well, actually, I think I owe 20. And we have an argument here about what the law is. And so I've had this before where people that have trusts that have been set up and then the IRS is coming to take a bunch of back taxes, and we kind of argue with the IRS and have discussions with the IRS, maybe I should say it that way, about, well, do you really have the ability to get money out of this trust? And the IRS says, absolutely. And we say, absolutely not. And so we'll compromise on that because there is an issue or doubt as to liability. But look, the most common, probably 95% of all the cases, it's going to be what's called doubt as to collectibility. So the IRS says, hey, John, you owe $100,000. I go, yeah, you're right, I do. And then I go to them and say, but look, I don't have the assets or the income in the future. Looking at my expenses that you allow as the IRS, I don't have the ability to pay this back. And so I'm going to propose a smaller amount. Maybe that's $20,000 on the $100,000 or $2,000 on the $100,000, whatever it is. And then the IRS will consider that. Well, we'll do another video where we get into a lot of the nitty-gritty about this, but just 4 things I want to leave you with. Number 1, and so many people get burned with this. They see the TV ad, they hear the radio commercial, and they go, "Oh my goodness, this is great. Oh, 100,000. I'm just going to write them a check for $500." It doesn't work that way. First of all, you've got to be current on your filings. You cannot go to the IRS and say, "Please help me. Please compromise with me. And by the way, I haven't filed my taxes the last 3 years." You've got to be current on filing your taxes. The second thing is, if you do propose an offer in compromise, and if an offer in compromise is to be accepted, there's basically 2 ways to pay it. One is a, quote, lump sum, and the other is a payment plan. Now, this is different than what's called an installment agreement with the IRS. We'll talk about that in another video. But here, we're just strictly talking about an offer in compromise. A lump sum, even though to most of us a lump sum sounds like, well, money right now. Okay, I write a check right now for this amount. They actually view a lump sum as that you could pay in 5 months or less. So really, you could make 5 payments on it. Now, a payment plan under an offer of compromise is 24 months or less. Now, obviously, with a lump sum, you could do just one all in one check, but they give you the option to pay over 5 months. Payment plan is 24 months. And here's the critical thing I want to leave you with. It's kind of like with Medicaid. So Medicaid is what pays for the majority of nursing home patients. And in most states, the rule is, let's say you're single with Medicaid, you've got to have your assets $2,000 or below. Well, you have $100,000 and you go into a nursing home, you have a stroke, broken hip, whatever, you're not coming out of the nursing home. They say, "I'm sorry, you owe too much, or you have too much in the way of assets." Well, that's true, but there is some planning you can do, even at the moment that you're in the nursing home, to be able to save a lot of money. Same thing with an offer in compromise. It may be, for example, that you don't have health insurance. Well, if you went out and purchased health insurance for your family, that might cause your expenses to be such that now they would accept your offer in compromise, whereas before they would not. Or you may need to get a new car, or you may need to get some life insurance on your kids, or whatever. I mean, there's a whole host of things you can do. There's some planning that can take place. For example, you might have unfiled state taxes and unfiled IRS taxes. And so if you file your state taxes first, and then you work out an agreement with them, and by the way, they're a lot harder to deal with than the IRS, which is kind of ironic, but it's true in most states, then that may show that you don't have enough income after your expenses, including paying back your old state taxes, that now the IRS will accept it, this offer in compromise. So again, there's lots of details, exceptions to exceptions, but the point is there is some planning that can go into this to increase your chances of being successful with an offer in compromise. So hope that this little video is helpful to you. If you have any questions or comments, put those below. And as always, I'm always very interested in your suggestions for topics, or maybe there's a particular case that you've read and you want me to go through and analyze that case. Happy to do that. Some of you guys will put that in comments. You're also welcome to reach out to me by email. I don't have it up here, but it's just John, John, at wattsherring, WATTSHERRING.com. And just let me know any suggestions that you have. And I appreciate you watching this video, and you guys have a great day. Bye-bye.